It's time now for our weekly ETF Friday segment. Fees for ETFs and broader funds have been dropping for years, but recently they've hit a new record. Here to tell us more is James Seyffart, Bloomberg Intelligence ETF analyst. What's the new record for ETF fees, James?
Yeah, so we constantly hear about this lowering of fees across the asset management industry. And in July, we actually had ETFs break through a 20 basis point level. So basically, the asset-weighted fee for U.S. listed ETFs is below 20 basis points, or 0.20%. So every dollar that's invested in U.S. ETFs is paying on average 20 basis points. And this is just that overarching trend from high cost to low cost. And within that, we see the active to passive trend. And all this is like a self-perpetuating cycle where investors are putting money in the cheaper products. Issuers that are issuing these products are lowering fees on existing ones and launching products with lower fees. And it's just a self-perpetuating cycle as investors move around.
James, the question I'm supposed to ask you is how low can this go? And I'm wondering if it's zero, because presumably we can't make money at that point.
There are a couple of products that aren't getting much assets that are zero or below zero. They'll pay you to invest. But we don't see this trend stopping anytime soon. So if you look at assets or where the money's gone so far this year to date, 95% of the flows have gone below that 20 basis point level. And if you look at the flow-weighted asset fee over the last year, so where has money gone? It's around 10 basis points. So we see it possibly going to 10 basis points in the next 10 years. But yeah, we don't see the trend stopping anytime soon.
What does it all mean for the industry, James?
Well, I mean, there's two ways to look at the industry, right? So from the investor side, it's obviously a good thing, right? Lowering fees is going to be good long term. Also from that investor side, there's this law of diminishing returns. So a couple decades ago, we've gone from a 1% fee down to 10 basis points in some cases. That's a huge deal for investors over the long term. But now we're going from 10 basis points to 7 basis points, and there's basis points here and there. It's not a big deal for the average investor. For institutions, it means a lot. On the other side, they have to asset managers have to match what investors are doing. And investors are going towards this core satellite approach, where 80 to 90% of their money is going to cheap beta. And then the 10 to 20% is going to other products. And that's where these asset managers can really charge a premium. Things like thematic ETFs with differentiated exposure, high active share, high octane equity asset management. And then we also see a kind of a bucking of the trend in actively managed fixed income funds. We see a lot of money going to actively managed fixed income. Advisors and investors just seem to view fixed income asset managers as being smarter or worth more money than equity active managers.